Hey guys, so in this video I'm going to be doing an in-depth analysis of AT&T stock. The symbol for them is T, and AT&T is the largest telecom in the United States, or at least AT&T has a larger market cap than Verizon. I think Verizon has more wireless subscribers than AT&T, but it is pretty close. So AT&T has four business segments. These are Business Solutions, their entertainment group, Consumer Mobility, and International. And I will be going more in depth into those later in the video. And then I will also be going over their most recent quarter, and then doing some more analysis of AT&T. And I will be deciding whether or not I think AT&T is worth buying right now. And if you are new to my channel, I make videos on the stock market and investing. So if you're interested in that, consider subscribing, and let's get right into the video. So as you can see here, their revenues are down slightly year over year, but their adjusted EPS have remained flat. And their cash flow from operations are up, with their free cash flow also up. Their reported EPS is down quite a bit, but that is mostly because of Time Warner financing and natural disasters, which knocked 7 cents off their reported EPS for this quarter. And then year to date, their revenues are down slightly compared to 2016, but their adjusted EPS is up 4.1%, and their adjusted operating income margin is up 80 basis points. So that is all good to see. And they do have slightly lower free cash flow year to date. However, their cash flow from operations is up. So they just have a bit more CapEx year to date than they did last year. So overall, they had a okay quarter. It wasn't great. They definitely didn't make Wall Street happy because they were down about 4% on their report. But I do think this reaction is a bit overdone. So all in all, sort of a mediocre quarter. So I'm now going to go into their different business segments and go over what each of those does, as well as how they did in the most recent quarter. So starting off with the entertainment group, which AT&T says that the AT&T Entertainment Group provides entertainment, high-speed internet, and communications services predominantly to residential customers in the United States. So their entertainment group was sort of their weak spot in the most recent quarter. Their revenues were down a bit, and their EBITDA margin was down by quite a bit. So this is mostly because of loss of subscribers in DirecTV. However, their DirecTV Now has been gaining subscribers, which sort of offset some of the losses. So in total, they have 20 million TV subscribers, which is down 90,000. But they added about 300,000 DirecTV Now subscribers in this most recent quarter. And then another highlight is that they're building one of the largest fiber footprints of high-speed internet in the country. So that is good to see. And then they also say that their growth in video advertising and high-speed internet revenues were offset by legacy services. So their AdWorks revenues were up 11% with continued growth in targeted advertising, but their margins were pressured by content, product mix, and platform costs. So in general, it was a relatively bad quarter for their entertainment segment. So I'm hoping that they can start to do better with DirecTV, sort of the satellite part of it, and then hopefully DirecTV Now can continue to grow and do well. Another important thing to look at is their multi-product success. And so their satellite churn drops by 50% when it's bundled with wireless. And they currently have 26% of their TV base on a wireless plan. So they can hopefully continue to add more bundles, which will drop their churn quite a bit. And so I see that as definitely a good area for them to improve. And hopefully that will stop them from losing so many subscribers with their traditional DirecTV packages. And then, like I said, hopefully DirecTV Now can continue to grow. So as you can see here, they lost 251,000 satellite customers, 134,000 UVerse customers, but then added 296,000 with DirecTV Now. So DirecTV Now sort of offset the losses from their satellite, and UVerse continued to decline a bit. And now for a look at AT&T's international segment, which has been growing quite a bit recently. And so they say that the international segment includes wireless services in Mexico and satellite entertainment services in Latin America, and that AT&T is a leading provider of pay television services in Latin America, with satellite operations serving Argentina, Brazil, Chile, Colombia, Ecuador, Peru, Uruguay, Venezuela, and parts of the Caribbean, and that the company also owns 41% of Sky Mexico, and Sky Mexico financial reports are accounted for as equity method investment. So their international segment is the bottom half of this slide. And as you can see, it is doing very well. Their revenues are up 11.7% from gains in Mexico and Latin America. They have strong subscriber and revenue growth in Mexico, even with the natural disasters. They had about 700,000 wireless net adds, which brought them to 13.8 million total subscribers, which is up 29% year over year. And they have continued profitability in DirecTV Latin America. So I'm definitely very excited by their international segment. I think that this is a strong area of growth for them, and hopefully this growth can continue, and I definitely think that it will. So next is their business solutions segment. And they say that the business solutions segment provides both wireless and wireline services to business customers and wireless services to individual subscribers who participate through employer-sponsored plans. AT&T's wireless and wired networks provide complete communication solutions to these customers. AT&T's business customer revenues include results from enterprise, public sector, wholesale, and small/mid-sized customers. So business solutions is shown in the top half of this slide. And their EBITDA was flat year over year. They had strong growth in their EBITDA margin, which is the reason why EBITDA was flat even though revenues declined. So all in all, their business solutions segment had a fine quarter. So the next segment is consumer mobility, and they say that the consumer mobility segment provides nationwide wireless service to consumer and wholesale subscribers located in the United States and in U.S. territories. The company's wireless network power voice and data services, including high-speed internet, video entertainment, and home monitoring services. So then they also report on AT&T Mobility, and AT&T's U.S. mobility operations are divided between the business solutions and customer mobility segments. For comparison purposes, the company is providing supplemental information for its total domestic mobility operations. So this is pretty much just a combination of their business solutions segment and their consumer mobility segment. So their revenues were down a little bit for their AT&T Mobility segment. However, their EBITDA margin increased all the way to 42%, which is absolutely insane EBITDA margins, and that's record wireless margins for them. They have a 50.4% wireless service margin with strong cost management, and they also had their best ever third quarter postpaid phone churn of 0.84%, which is very strong. That's quite low churn. So then they also had strong year-over-year improvements in postpaid phone net adds, and nearly 100,000 postpaid smartphones were added to the base. And that's 130,000 branded net adds with 227,000 prepaid phone net adds. And so you can also see that their share of the industry service revenue has increased from 33% in 2015 to 34% in 2017, which is very impressive because of how competitive the telecom industry has gotten in the last few years. So they have not only been able to maintain their share of industry service revenue, but they have been able to grow it. And then smartphones as a percent of their base has grown from 87% in 2015 to 92% in 2017. And so here is sort of a summary of their quarter. They left guidance on track. They did not change it. They had stable third quarter adjusted earnings and margins with 13% growth in free cash flow. They had their best ever EBITDA margins with record low third quarter phone churn, and that they are on track to build one of the largest high-speed internet footprints in the country, and that their video model is evolving and they are ready to position content with advertising opportunity. Their bundles are growing, and DirecTV Now is growing quite a bit as well. So here is the business update that they provided. So the Department of Justice approval is pending for the Time Warner acquisition, and that all other jurisdictions have approved, and they continue to expect it to close by year end, and that Time Warner continues to perform better than their expectations. And so Time Warner had a really good quarter recently. They beat earnings expectations by quite a bit, so that is good to see. And then for FirstNet, they say that 27 states and territories have opted in, that the 90-day state opt-in clock has started, and that the deadline is December 28th. And that there is an automatic opt-in for states that don't take action, and that they will begin constructing the first net in the first quarter of 2018. They did say that they had already spent $200 million on this during this quarter, I believe. And then they also see regulatory and tax reform as a good area for growth for them. They currently have around a 35% effective tax rate, so a corporate tax cut would definitely help them a lot. And then also net neutrality being repealed would probably help them quite a bit. And so hopefully all of this will be beneficial to AT&T in the long run. So here are some areas for growth that I see for AT&T. So the first one is declining churn. If their churn can continue to go down, then that will definitely be beneficial for them and will help them grow in the future. Another big one is connected devices. Apple Watches now get cellular on them, so I think that will definitely be a big area of growth for AT&T if they can get a lot of people with Apple Watches to buy cell plans for those. Then they will definitely make a lot of money off of that. So the next area for growth that I see would be their merger with Time Warner. We won't see how that goes until after the merger, of course, but I think it will definitely have the potential to benefit AT&T quite a bit because they will now own DirecTV, which is a way for people to watch the content, but they will also own Time Warner, which produces the content, and they will have their cell networks, which are a way for people to get the content to their phones or devices. So they will pretty much just be completely vertically integrated in that aspect. So I think that could definitely be beneficial for them. So I will now go over AT&T's valuation. So as you can see here, they have a price to earnings of around 16, which is a lot cheaper than the overall market, and a forward price to earnings of 11.6, which is also quite a bit cheaper than the overall market. And then also they have an enterprise value over EBITDA of 6.67, which is definitely pretty cheap as well. So all of the valuation metrics point to AT&T definitely being pretty attractive. I will now take a look at AT&T's dividend, which is obviously a pretty important part of the stock because it is currently yielding around 6%. So AT&T's dividend looks pretty safe to me. They're currently yielding around 5.8% with a payout ratio of 67.1%. And they have raised their dividend every single year for the last 32 years, which means that they are very committed to paying out their dividend. So all of this is a good sign and makes me think that their dividend won't be cut any time soon. So there are definitely some risks that I see with investing in AT&T, so I will go over those now. So the main risk that I see for AT&T is their $150 billion in debt, and I'm not overly concerned about that, because only 7.8% or so of their debt is floating rate, and so the rise in interest rates likely won't have a major effect on their debt. And then the rest of the debt is between 4 and 6%, so not ridiculously expensive. So I do think that the debt won't be a serious issue for them, at least currently, but it is definitely something that is worth monitoring to make sure that they don't get themselves too swamped in debt. And then the other major risk would be if their acquisition of Time Warner doesn't go well. This is definitely, I guess, a possibility, but it doesn't seem likely to me right now. But it is definitely always risky when there is a very large merger on the table for a company, and so that will also be something that I will be keeping close track of because I own AT&T stock. And then finally, the last risk that I see, or the last major risk that I see, is if DirecTV continues to bleed subscribers. I don't see this as super likely, but it is definitely a possibility, so that will also be something that I will be monitoring. So I definitely think that AT&T is worth at least taking a look at. I know I have bought more recently, so I think it is attractive to buy for sure. I do think that the dividend is great. I think that they have some strong growth opportunities in the future, and that their valuation is very reasonable right now. So I think it's worth taking a look at AT&T, especially if you are looking for income stocks. And if you're not looking for income stocks, you can always reinvest the dividends, which is what I'm doing. And you will get a lot more AT&T stock just from reinvesting those dividends. So I would love to know your guys' opinions on AT&T stock. Leave a comment down below. If you enjoyed this video, leave a like down below as well. Thank you guys for watching. If you aren't subscribed, I'll make videos on the stock market and investing, so consider subscribing if you're interested in that.